David, welcome back. It's good to see you again. Gold traded above the 2017 highs this week to 1365.40. What's behind the bid, and is there more to come?
Well, obviously, we had a very dramatic market this week with all the announcements coming out of Davos. Secretary Treasury Steve Mnuchin, President Trump. Who knows what to expect next, depending on who you're going to listen to and who speaks the loudest. And I think President Trump is going to have that voice. Obviously, we saw one day when the gold market did breach its 2017 high on the backs of Steve Mnuchin saying it's good to have a dollar that's falling or a low dollar. Obviously, there is some benefits to that. But then the next day, President Trump, not even before his speech, because he's speaking today, says, you know, we need a strong dollar. A strong dollar is what makes America great. So I don't know who to believe, but I'm going to follow President Trump. But although he did say a year ago in April that we need to have a weak dollar because the dollar is too strong and we can't compete against China, and that's creating trade deficits. So, you know, my philosophy is you got to pick the side of the fence you want to be on. But I think we're going to have more of a stronger dollar here from in the short term, not a weak dollar, but long-term trending down. So we're having a little bit of blip. It's very dramatic, and it's hard for traders to see what's going to happen next, obviously, with what the reports are coming out of Davos.
David, with gold really getting all the headlines here, let's pivot, though, and talk about silver. Now, silver seems to have lagged as gold took off here in these final legs. Is that a message we're getting from the market that silver's not going along? Should that have been a red flag that maybe gold was getting extended, or is silver just not the same trade? They seem to trade in a sector.
Well, I think the silver and gold trade is not coupled together very strongly. When you look at the silver market, you know, it's not been a very good asset to buy and hold for the last 7 years. It's lost 66% and it's declining since its 2011 highs. And when you look in the silver market inside a falling channel, we've been there since that period of time, 2011. It's tried to break out a few times here in the last 2 years. And ironically, it actually did break out of that falling channel only for 2 days until President Trump spoke. So there's this sentiment that hopefully, you know, all the silver bugs are saying, this is the breakout, this is the breakout, get ready. And then all their dreams are shattered across the trading floor. So I don't know if this is going to be a high-ho silver moment. I'm still yet to waiting to see that happen. 1 day or a day and a half, in essence, in this volatile market based upon what is being said is not enough to make a trade to say we're having a breakout in silver, unfortunately, Kevin.
Yeah, David, you mentioned, again, a volatile market a couple times here. We're certainly seeing some of that in the copper market here as well, with the housing numbers, which for the most part in the U.S. seem to have slowed some compared to the very robust numbers that we were seeing as we closed out 2017. Yesterday, for example, new home sales came in a bit below estimates. Copper's holding right around 320 off that December 17 high of 3.322. Have we seen the top of the mountain, or do you think copper can continue to advance in 2018?
Well, it's trending down right now in the short term. I think long term it's going to be higher. And Ben, you know, we need to look at two things when it comes to copper: China and the United States. China is the big buyer for copper. And last year, production was 23.5 million tons, and China used 64% of that. They imported 19%, their imports are up 19% from a year ago. And the Chinese economy grew huge last year, 6.9%. Most of that is due to their infrastructure building. The government thought, though, they were going to only grow 6.5%, so the analysts outperformed the reality of what the government thought. But analysts today, Ben, are saying something different. The economists and analysts are saying that China is retracting. They're not creating as many risky loans in their infrastructure and their high-rise buildings. So we need somebody to come in and help the Chinese market out in the copper supply. And here comes the government. The government recently announced in China, Ben, that they're going to rebuild their total power grid to the tune of $300 billion. That's a big chunk of money going into the copper market. I think it's going to take a couple of years, maybe 4 years, for that to come to fruition. And, you know, maybe China's not really actually going to follow through. Maybe they're just trying to support their market. When we jump back to our side of the pond, the United States, Obviously, the housing new sales up last year was huge and a help to the copper market. When you look at the month of November, it spiked 15%, but then it collapsed in the month of December, 9.3%. And I think that took some of the wind and the push behind the copper market. But when you look at the supply, inventory data is basically one way of analyzing the market. But that yardstick right now is flawed in the copper market. Look what happened earlier this week at the LME. 31% jump in the market, not the market, but the inventory data coming out of the LME in just 2 days. That's sending all kinds of mixed messages to the copper traders. So when you look at copper spot, short-term 30 days we're down, long-term we're up, but the spike on the inventory in the LME is just astonishing. So who knows how to trade this market right now?
When you're talking about commodities, right, you always talk in some way about the dollar. But just like the crude oil trade, sometimes there's more micro stories that trump any dollar trade with crude oil. Is that the same thing with something like copper? Should we be looking purely at the micro trades, which is China demand, U.S. housing numbers, things like that? Or should we always, like we probably fundamentally should, keep one eye on the dollar as well?
Well, it did get affected this week by the dollar, Kevin. Certainly what's coming out of Davos in the announcement. And I think when you look at all metals, they all got affected by what the announcement were, because it all is traded mostly globally in dollars. So I think that impacted on a negative short-term movement. But looking at the copper market, I still think the fundamentals are in place, considering that 75% of copper usage goes to electrical wiring. I think if we have an infrastructure spending bill, $1 trillion here in the United States, we're going to see higher copper prices. But, in the short term, we're going to have some choppy headwinds moving forward.
Hey, David, one of the things I like about having you on the show here is you can talk palladium. Not a lot of guys can, but we've clearly seen a well-defined trend to the upside. But for now, it seems like it's topped out a bit at 1133. I consider some of the balance that's forming up there acceptance of upper-level price activity. Are you still seeing some supply issues and increased demand for palladium?
Well, there's a shortage in palladium. I said this last week on your show, and I want to correct the quote. It was HSBC Bank, not Citi. HSBC Bank says there's 1.1 million ounces of shortage in palladium. That's a huge problem and should cause higher prices in palladium. We see that JM, Johnson Matthey, is saying there's about 800,000 ounces of shortage in palladium. So we have a demand that's equating as stripping out the supply. Will we continue to see that? I don't think we're going to see it as significant as we saw a 55% increase in the palladium market last year, and that was due, like what I said, to what was happening in the hurricanes and having to the repurchases going on the car industry. I think as we see higher rates, the Fed lending rates, or the Fed lending window rate going up, that's going to eventually translate into higher auto rates when people apply for a loan. I think that's going to diminish the demand side, and so we're going to have some problems there.
So educate our customers in terms of what, I know about oil and gas, right? I know about gold and where it goes. Tell me where palladium, I know where copper goes in terms of housing. Where does palladium fit in terms of what goods does palladium produce?
Well, palladium is not the biggest trade out there as far as demand side, but it's been the biggest movement, and that's been as a blip from a standpoint of what happened in the car industry. Although it's been on a 4-year plus run upward, I just don't think we're going to see those huge movements in the future. I like gold. I think, we're going to have some economic challenges moving forward. The equity market has been phenomenal, almost too phenomenal, and now it's showing signs of bubbles. And I think really the play is going to be, maybe not percentage-wise this year, but I think we're going to see in the next couple of years a big movement in gold. We're in a 3-year movement of gold. The first year we had a 9.5% increase from 1,050 to 1,200 plus, or excuse me, 1,225. We saw a 13% increase last year. We're at a little over 3.5% so far this year. This is all based upon the fundamentals of equity bubbles people feel it's going to happen. The burst is not a matter of if, but when. Government deficits are going to grow through the tax bill, and government debt is going to grow through just tuition of spending. So there is some uncertainties, and people go to gold during those environments, not palladium, not silver, and not platinum.
All right, well, we'll be watching the gold price there then. David, always great to have you on the show. Loved your take on the metals there. Thanks for joining us here this morning.
Thank you, Ben.